Essential business news as it breaks, now on BBC World News. Live from Singapore, Asia Business Report.
Now, China aims to eradicate poverty by 2020. Speaking at the National People's Congress over the weekend, Premier Wen Jiabao announced that Beijing will pump more money through development. According to the United Nations, China still has 150 million people living under the poverty line, which is around $1 a day. Meanwhile, Premier Wen is confident that his country is on course for another 5 years of robust growth. And the top priority this year, curbing inflation, which, like in many other countries, has threatened social stability. How China, the world's biggest source of climate change-inducing greenhouse gases, will reduce carbon dioxide emissions will also be a concern in its quest for growth. And for more on the outcome of China's annual parliamentary session, we're joined now by Duncan Innes-Kerr from the Economist Intelligence Unit in Beijing. Now, Duncan, Premier Wen's opening speech put reining in consumer property prices as the nation's amongst the nation's top priorities. How are economists seeing that play out? Will there be more interest rate hikes to come?
I think we're certainly looking at another two interest rate hikes this year at least. The interest rates have been at a very low level for a very long time in China. And the government's looking to tighten monetary policy as it aims to combat inflation pressures. The Premier was saying that the target for inflation this year is 4%. There are not many analysts who think that the government's actually going to be able to keep inflation down to that sort of level, particularly with this growing pressure from international food prices, from rising global oil prices, and so on. So I think he's looking at a very challenging situation at the moment.
Now, there's a concern that interest rate hikes might put a dampener on industrial activity as the cost to manufacturers to borrow goes up. And of course, that could impact growth, which the government still wants as a priority to try to cushion the impact of some of these reforms. So what's to be done there?
Well, the government's 5-year plan has set out a target of GDP growth of 7% on average over the next 5 years. But I think it's very interesting when you look at what's going on in the local level. Local governments, for the most part, are looking at double-digit GDP growth rates. So in many ways, I think the government is still behind on its target of reining in growth at the moment. And it's very aware that if the economy does expand at the sort of rates that the local leaders are trying to push forward, then that is likely to stoke further inflationary pressures, lead to growing instability in China's growth structure. So in many ways, I think the government would actually be quite happy with a slightly slower rate of growth at the moment.
Now, let's take a look at some of these other targets that Premier Wen Jiabao put forth in the National People's Congress. He wants to eradicate poverty by 2020. Is that a realistic target?
Certainly, I think it is. The sort of underlying theme of a lot of what's been going on can be summed up by the phrase inclusive growth. The government's looking at a much more proactive approach to reducing social inequalities over the next 5 years, particularly through the taxation system. It's talking about doing a lot more redistribution of income. Yeah. At the same time, you're going to be seeing a very strong market-driven pressure to raise wages, particularly for the semi-skilled parts of the workforce.
What about its aim of going green in the next 5 years? Is that realistic?
I think that's going to be a challenge in many areas. China's dependency on coal in particular, which accounts for over 70% of its energy production at the moment, is going to make it very challenging to rein in air pollution. I think in other parts of energy, the government's focus on green energy will see a lot of opportunities emerging, particularly for sort of foreign businesses, as it tries to clean up the environment.
Right. We'll leave it there. Duncan Innes-Kerr there from the Economist Intelligence Unit in Beijing. Thanks for joining us. And of course, we'll be bringing you more coverage of the annual National People's Congress in China on Asia Today, just very shortly. And a very quick look at the markets now. They're expected to struggle. In fact, Australia, which is open at the moment, is already down over 20 points. That is mainly due to further unrest in Libya. That's sending oil prices considerably higher. Investors are pumping money into safe haven assets. They're selling out of emerging markets. Oil prices continuing to climb to their highest in more than 2 years. And that's it for this edition of Asia Business Report. But stay tuned. We'll be back with Asia Today.